Welcome to another episode of Mortgage Matters, every Wednesday with Team Adwar. Here's your host, Todd Adwar. All right. Welcome back. How we doing? It's Wednesday at 11 a.m. That means Todd Adwar's back with the Adwar team and Mortgage Matters. Welcome, Todd. How's your week?
My week is great. We are so busy right now with new buyers and refinances again, which we're going to talk about. So things are really terrific.
That's good. There's a lot of craziness. I know we'll get to it, but a lot of things happened over the last weekend. So I'm excited to get into what's happening with the market update and everything we've got going. But have at it. Tell us about what is going on.
Yeah. So as you know, we like to start the show off with our Mortgage Matters weekly update. And the exciting thing is rates have come down and come down significantly. So if you look, the 30-year fix is now 6.52. 15-year fix is down to 5.93. 30-year FHA mortgage, wow, 6.12. And even the jumbos are in the sixes again, 6.68. This was as of yesterday, I think, or yesterday. So we've had this great drop in rates. It looks for sure like in September, the Fed's going to loosen rates, and they may even loosen rates a little bit more than were originally projected, which dropped everything, more than we were expecting. So that's great. What we're recommending, obviously, and why we're doing this terrific show today with two of the best realtors. We have a realtor from Florida and a realtor from New York that we're going to introduce, is because the markets are going to soar, Tim. So we want to get our clients, we want to get our viewers out there buying homes, immediately if they don't, and we want to get them to refinance to save money if they got a mortgage in the last couple of years. So interestingly enough, we have some new rules out that went into effect for buyers' commissions.
Yes.
And, what does that mean, in different markets in the country? So the buyers' commissions for realtors have come down a little bit, Tim. Mm-hmm. I don't know. Do you have that chart?
There it is.
Yeah. So in the U.S. metro areas, we have from Baltimore to Miami and Denver and Dallas, and you can see all of the different markets that we did. So in the last 4 weeks, they came down a little bit, but not significantly. So the end of the buyers brokers is absolute baloney. It's not going to happen. Maybe the commissions will be slightly less, but nothing dramatic.
Well, I think that first off, let me just ask you. I should have asked you before the show, but this says January 28th. This was June 28th.
That was at the beginning of the year.
Okay.
So January 28th through July 14th in the last 7 months, right?
Okay.
It barely moved.
Right. Well, the NIR rule, I believe, starts August 17th, where they're just not going to publish it. But everyone's been talking about this for months.
You know what's happened with the NAR coming out. People, it's already baked in to a certain extent, and really nothing's happened. So, I was happy about that because the buyer's agents do so much for the buyers. Yes,
and absolutely.
And I see it as a necessity when you're buying a home.
Oh, 100%. Exactly right. All right, let me jump to the next one.
Yeah, so very interesting. Homeowners are sitting on trillions of dollars in untapped equity. A lot of people have huge credit card debt, so they should be tapping into that. You should be looking at tapping into your equity to buy more properties because, of course, homeownership creates generational wealth. In second quarter of 24, home equity reached a record $11.5 trillion. Tim, that's a lot of money, and that's fueled by obviously rising home prices that outpaced the $13.8 trillion in mortgage debt. That's according to the ICE Mortgage Monitor. 32 million homeowners have at least $100,000, not in equity, in tappable equity, meaning they can get $100,000 out of their home if they wanted. Pay attention, folks. go into your equity, look to purchase other homes. I think home prices are going to really run as the rates come down, because as people get lower payments, they can afford a lot more home.
Right.
So here's something you see, and this is why the press, I hate the press as far as real estate's concerned. I really do. And Fannie Mae and Freddie Mac are going to tighten real estate lending rules. This is the exact line from the Wall Street Journal, the exact article. Gets people to read it, right? So what are they talking about, Tim? They're only talking about commercial real estate. They're not talking about residential real estate. So it freaks people out. Hey, you know what's going on here? They're going to make it harder for me to buy a house. This is terrible. Yeah. Fannie Mae and Freddie Mac have $2.2 trillion in commercial real estate loans, and they're worried about appraisals, and they're worrying about the banks doing a better job getting tax returns from commercial real estate owners. That's a very small percentage of people in the country own commercial real estate.
Right.
If you are thinking about buying commercial real estate, our realtors do that as well. You really want to look into that. I think warehouse market is fabulous. I think the apartment market is fabulous. Obviously, office space is not so great right now.
Right. Right.
That brings us to the most interesting part of our week. The financial markets are freaking out. And let's talk about that. So fears of a recession in the United States sent shockwaves really through the financial markets. On Friday, the rates dropped. And then on Monday, what did we see, Tim? The Dow Jones was off about 1,000 points by 10:30 a.m. Everybody heard that Japan was down 12.2% in one day. That was the biggest drop since 1987, you know, in the financial markets. And all of a sudden, people were absolutely going crazy. They were looking at their 401ks. They were looking at their stock market. They were looking at the Magnificent Seven, which lost $2 trillion in value. Yeah. Now, we know that in the last day and a half, they've gotten a lot of that money back. They haven't gotten it all back yet, but they've gotten a lot of that back. And it's not so much to fear. But what has it done? It's created a drop in rates, and it dropped like a rock, and they've come back a little bit. But it's really a good buying opportunity. And with that, you know, the turbulence, I want to introduce our realtors, if you can bring them on.
Yes.
Good morning.
There we are. Good morning. Good morning.
Good morning.
So we have two
everyone.
very, very experienced realtors. I want to say 20 years plus because I'm a gentleman. These ladies were arguing with me because they're 25 years plus in the industry. Hush, hush. They look too good to be doing anything for 25 years. Melanie Listrom is in Florida. We wanted to compare and contrast markets. She's been in the market for a very long time. She's with Remax. And Lovelee, Aparicio-Vetri, has been in the market over 25 years, and she's with Realty Connect. I have actually given deals to both of these fine ladies in the last 6 months or so. They both closed loans with me. They did a great job. Both of my clients said, wow. And when you get a wow from realtors, that's like the best response you could get from people. And great. And not only that, but my clients are recommending them. And that's always nice to hear. So ladies, welcome.
Thank you. Welcome.
So the reason why I have both of you on, you know, Melanie's in a different market. The Florida market's a little bit different than the New York market. Why don't you guys, Lovelee, why don't you describe the New York market for our viewers? How would you categorize our market right now?
Well, New York is undergoing a major change as we are finding nationwide. And we are just catching up to some other states that have already had certain things implemented, especially when it comes to the National Association of Realtors settlement. So there are a lot of changes that are taking place. We have the August 17th date as the deadline, but we've implemented, and right now, the forms that have been issued by the Department of State NISAR, LIBOR, our local governance, have already been put into place. So as of right now, as of August 8th, tomorrow, everything is being launched. The market right now for Long Island, for New York, and again, price range dictates a lot of this. You have the price range ranging up to possibly about the 1.2, 1.5 range. You're having multiple offers on properties. We have very low inventory. This has been the case probably for the last 8 months to 9 months. We did see a little bit of an uptick at the beginning of the year. Then it calmed down a bit. But for right now, due to the lack of the inventory, we're seeing that many more multiple offers on properties. With those offers are coming strict contingency. People are waiving certain contingencies. Some homes are pricing well over 50 to 100. I've seen $200,000 over the asking price. And right now, a highly pre-approved buyer coming in with very strong offers is extremely important if you want to be in the market and if you want to be able to capture one of these proproperties. So
pay attention, folks. If you don't have a strong pre-approval, not a full approval versus a pre-approval, it's going to be tougher for Lovelee to get your house. Mel, tell us about the Florida market.
Well, of course, our market changes throughout the year because we are definitely a somewhat of a seasonal market. So not to say that we don't have business all year, but it changes. So our strongest time of year, of course, is January, February, and March. And then we go into the summer months. So summer months, we really only have people that are either relocating, either buying a second home, getting ready for season, that sort of traffic. But our market is very strong. It always
Are you still in a bidding war market? I know Florida was the strongest market in the country for a long time.
Absolutely not. It's definitely a buyer's market.
So all those 60-year-olds, people in New York who are thinking about moving to Florida, I could sell my house at a profit in New York and then move to Florida and not be involved in bidding wars right now.
Correct. I think right now is the perfect time to buy. I mean, people with good credit are getting excellent rates, as you said, and they don't have to go into a bidding war. So we have motivated sellers. Of course, we realtors don't put them on the market for under appraised value, but sellers sometimes are willing to take it. Right. So it's a great time to not compete with other buyers. You can actually come and find what you want and negotiate a price that's comfortable. So I personally think it's a perfect time to buy.
So Lovelee, would you say there's less inventory in 24 versus 23 or about the same?
There was a bit of an uptick with inventory. And again, I saw this very strong in certain markets. Certain towns I just saw were pulling out listing after listing. I wasn't sure what was happening, but overall, we're seeing still not as much inventory for the amount of buyers that are out there ready, willing, and able to purchase. The main issue right now is going to be transitioning the buyer's state of mind to where they've been accustomed to decades now, where 98% of buyers are not in a contractual agreement with a buyer broker. That is changing as of this coming week. By this time next year,
so if I want to look for a house, I'm a buyer, I want to look for a house, I'm signing a contract with the two of you that says what?
Well, again, right now, about 98% of buyers are not under contract.
Right.
Prior to an agent touring a property with a buyer, they must have a signed contractual agreement with that buyer. to either work as a non-exclusive or as an exclusive.
Right.
This means times have changed where the buyers did not have to commit to an agent. There now is a level of commitment from both parties. This is good news for the agents. As you know, we work extremely hard. There's a lot that's going on behind the scenes. There's a lot that we do. We're working 7 days a week. We're putting in hours that are ridiculous if you think about it, but we do this because we care, and we want the agents that are doing this and that are doing this the way they should are doing this because we care. We really want to help our buyers and our clients get to the next level and achieve their real estate goals. So there's going to be a transition with this. About this time next year, 98% of those buyers that
We're
are
going to go from 98% one way to 98% the other way.
exactly.
Mel, what would I have to pay in your area as a first-time home buyer? And what does a first-time home buyer property look like in your
Well,
I know that's a broad question.
yeah, that's very broad. So the truth of the matter is, here in Southwest Florida, there's not a lot in the 300 to 400 range. There
Okay.
are some homes, and that's usually first-time home buyers. That's their comfortable number, it seems to be, or certainly under 500. But so most first-time home buyers here in Southwest Florida do pay between 400 and 500.
Gotcha.
But they get a beautiful 3-bedroom, 2-bath, beautiful amenities. You know, they can play pickleball, swim, spa, fitness.
The whole thing.
Yeah, the whole thing. So
Don't
it's a
start. I
beautiful
may have to come down
lifestyle.
there.
Yes. And of course, you know, there are all sorts of incentives, and I should say concessions, that sellers are willing to make
Because
now
of the
to
more
help the buyer.
But
you
what
know.
I read, Mel, and tell me if I'm wrong, that even though there's more houses for sale in Florida as a whole, all over the state, there's still less houses for sale now than there was pre-pandemic. Is that correct?
No, I disagree with that for sure.
Go ahead.
I would say, yeah, I would say probably there's a third more now than there was pre-pandemic, for sure, positively.
Mm.
Okay.
And much more this year than last year. But of course, you know, things have changed, not only regarding, you know, interest rates, but insurance. And the truth is, I mean, here in Florida, there's a lot of transition. We have a lot of elderly that are going into assisted living, and their children inherit the properties, and, you know, so there's a lot of transitioning.
Right.
So
Lovely. Have you seen an increase in activity? Because our rates have gone down in the last month. We were 7.5 last month, guys, and now we're 6.25 to 6.5. And on a $500,000 house, that's $500 a month. So that's a significant drop in payment. Have you seen a lot more calls?
We've seen a little bit of an increase, but to be honest with you, the market here has been extremely strong. Even with the higher interest rates, these buyers were out and they were ready and more than capable of purchasing a property if the need and the want is there. And if you're working with a mortgage lender such as yourself and a real estate broker such as myself, you can articulate the importance of building that equity, not allowing a few points in interest rate to stop you from going on to the next level of building your real estate wealth. Keeping in mind that as the rates are come down, eventually they do come down, as we're seeing now, they have that ability to refinance. So I think it's important to have that conversation with the buyers. Sometimes they're a little stuck. They're focusing highly on that interest rate. Now that the interest rate has gone down, you're starting to obviously see a lot more phone calls. People are now wanting to invest. I think it's a great market, like you said, especially for clients or property owners that have that built-in equity into their homes. I myself just took advantage of that And I have a property that I've built some time ago because I went into construction. I built a few properties, a couple in Florida, and I've just turned one into an Airbnb. With that said, I had a significant amount of equity into the home that I tapped into.
Right. So
And I'm able to use that for other things. So I think you're going to see an increase, and we're starting to see that now a little bit more than we did in the last year.
great. So one of the things that, during Christmas time, we always have, oh, let's wait until after the holidays. Have you ran into anybody who's starting with the election? I want to see what happens with the election before I list my house, or
Positively.
yeah. So
And that's historical. That's every election year.
but
There's
what's
no doubt.
interesting is I don't think it matters. I think we're going to have low rates, and I think we're going to have really strong rates. And I think now's the time for them to buy the house before. I think you're going to be back in bidding wars in the next 6 months, Melanie.
Yes.
With
Well,
the
the
rates
truth
coming
is, yes, absolutely. That's why I encourage them to buy it now. And because the difference in the interest rate, they'll make it up in the price by
Exactly.
far.
Right.
So that's what I try to educate them. And
Right. So
yeah,
we
for
saw
sure.
we saw Martha. So Martha's
Martha
retiring
was
at-
mentioning the election, but also Martha's retiring at the end of the year. And should I wait to sell the house in New York and buy in Florida?
Well,
That's
there's
your
something
question.
to be said about waiting. Every second that you wait, you're missing out on a wonderful opportunity. And like Melanie said, you might be paying lower with the interest rates, but that's going to reroute itself into the cost of the home. So
And you may not get it in the bidding war.
exactly.
Yes.
So you have to.
So Martha, we have two realtors for you. We have your New York realtor and we have your Florida realtor. So good question.
But the election, honestly, when it does come up and other objectives come up, you really want to articulate and stress to them the importance of acting now. And I always tell my clients, you want to be able to act on real estate when you want to and not when you need to. And that's extremely important. So if you're in a situation where you have that want, that puts you in a stronger position as a client, whether you're selling or you're buying. If you place yourself in a position where now you have the need and you have to, for some reason, it could be family dynamics, financial, that is when you're weakening your position in the market.
So what are our thoughts about the next 12 months? Mel, where do you see the Florida market in the next 12 months? Up, down, sideways? Where do you see it?
Honestly, I think right after the pandemic, prices here kind of went crazy because we had a tremendous influx of people. Right. So I personally think there's going to be a little bit of a correction,
right?
Which is why I think it's it's a buyer's market because it's already happening.
So when I think to myself, boy, I should have bought in Florida in 2019, and now the prices have more than doubled all over the state, I might get a decent deal. Not back to where that was, but
they haven't doubled necessarily. I mean, certainly not. It depends on what it is, of course. Right. It's relative. Mm-hmm. But prices, prices are coming down. So it's more reasonable. People can definitely find what they want for the price they want and get a beautiful home.
What can I expect in New York, Lovelee?
Well, you can expect, Melanie mentioned a 3-bedroom, 2.5 bath for somewhere under $500,000. Again, with New York, it's a different kind of an animal. You're looking at the geography, you're looking at property size, where in Florida, again, you tend to look at things from community first, and then the house comes second. With New York, Long Island specifically, a lot of the buyers are looking at, multiple towns, property size. So let's just say you're looking at a half an acre to an acre. That $500,000 or $400,000 in Florida is easily $850,000, $900,000 here. depending on the property
So we
size
get higher home values and higher taxes.
and the taxes. If you're
Yeah.
looking at a newer home, whether you renovated or you built or you added square footage, the taxes right now are running somewhere between 25,000 to an upwards of 30,000. And again, depending on the size, square footage of the home, the newness of the home, the amenities, and the property size. So you have properties that have taxes of 40, 50, 60 upwards. On an acre of property, your neighbor next door might be paying probably about 22,000, 20,000. So the taxes are, again, causing a lot of clients to have to make early decisions, especially as they're nearing their retirement. And depending on what's happened with their pensions, their 401ks, there's a lot of thought going behind now downsizing. So the New York, Florida market seems to work hand in hand. Where we're selling strong here, people are looking to invest and purchase in Florida for a variety of reasons. I think right now, if you're looking to sell and you know that you have a retirement or you have plans on relocating south, let's just say Florida, the Carolinas, this is a great time to sell your home and invest in Florida. I was looking at a property in Florida, specifically in the Tequesta area, which is part of Jupiter. And it began at 900,000. It was new construction. By the time it was rolled out and approved by the town, they were selling for $2 million. Same exact house ended up selling 8 months later for $3.5 million. Now I'm getting emails and they're giving away the homes with casitas and all sorts of incentives. Right. So there has been a trickle. It's important to know that market when I'm dealing with the clients on this side because of the relocation aspect of it.
Right. So a couple of things that I want to put out there to the realtors that watch the show and to the buyers. So anybody who got a mortgage from, say, June of 2022 through a month ago should be looking at possibly refinancing their house and taking some of that profit out of their home. Also, ladies, I think it's a great idea for you to call your clients who closed and see where they're at, because they may be interested in refinancing. And if their home's worth more, they may be able to trade up, especially in your market, Melanie. They may be able to trade up at this point because they've still increased their value in their home and they have more equity, and they can get that trade up house, significantly cheaper at a lower rate. So I think we're going to have a great 25. I think things are going to firm up. I think there's going to be bidding wars all throughout the country again. And I really think 25 is going to be our best year in the last 3 or 4 years. So folks, all of you watching, this is your year to go buy a house and or trade up to that dream house.
Absolutely.
Absolutely.
Thank you so much, ladies, for joining us.
Thank you. Thank you.
Bye, everybody.
Bye.